Yoko Humphries. I assist buying and selling homes on the Big Island. I work at eXp Realty and lived in Kona for 20 years. Let's say that you have been renting a place to live and thought to start building equity instead of paying rent. Yes, you decided to buy a home. What is the very first action to take? Search home for sale online. Visit open houses in the neighborhood. Start saving money for the down payment. These are all good. However, as a real estate professional, I like to recommend to do this when you decided to buy a home. That is, reach out to mortgage officer. By consulting with the mortgage officer, you can find out your options for the loans. There are many programs for the first-time home buyers. Some loans don't require down payment if you fit in that category. And find out what is needed to qualify for a loan. Some may need to work on improving credit scores. Some may need more money for down payment. The good news is, if you know what to do, you can start working on them. Mortgage officer, such as Shinichi, can navigate you and make plans for you. Make doable plans and take actions. And when you are pre-qualified for a loan that is suitable for you, it's time to find your buyer's agent. I like to talk about agencies. In the process of buying a home, there are two parties, that is, buyer and seller. In most cases, buyer hires buyer's agent. In this case, buyer's agent's brokerage firm represents buyer only. Buyer's agent owes the highest duties to buyer, including confidentiality, loyalty, and due care and diligence. In other words, buyer's agent works for the buyer's best interest. In most cases, seller hires seller's agent to list their home. Seller's agent's brokerage firm represents seller only, and seller's agent works for the seller's best interest. In some cases, brokerage firm represents both buyer and seller. This is called dual agent. This occurs when agent in the brokerage firm representing seller have buyer clients looking for types of property similar to seller's property. Dual agents must remain neutral in negotiations and must not advance the interest of one party over the other. At any rate, hire a licensed real estate agent representing you to purchase a home. Now, let's say you are pre-qualified for a home or condominium up to $400,000. What can you buy on the Big Island? Let's take a look at some homes on the market right now today. In Kona and Waikoloa Village, you can buy a condo unit. This condo on the left is right in town. 1 bed, 1 bath, living area 623 square feet, and listed at $380,000. You have some ocean views. This condo in Waikoloa Village is 1 bed, 1 bath, living area 514 square feet, and listed at $388,770. If you go down south in Kau district, there are some newer built single-family homes you can buy. 2 bed, 1 bath home on 1 acre, built in 2006, is listed at $360,000. two-bed, two-bath home, also on 1 acre, is built in 2013 and listed at $399,000. Please be aware, homes in Hawaiian Ocean View Estates are on catchment tank and in lava zone 2. In Hilo, some condo units are available. Two-bed, one-bath condo unit right by the ocean is listed at $399,900. Another two-bed, two-bath condo unit is also right by the ocean and listed at $390,000. If you go south of Hilo in Puna district, you can buy newly built single-family homes. Three-bed, two-bath home is built in 2020 and priced at $360,000. Three-bed, two-and-a-half-bath home is brand new built in 2022 and priced at $399,000. These homes are both on catchment tank and lava zone 3. Now, today's review. First things to do when you decide to buy a home is to reach out to mortgage officer. Mortgage officer can navigate you to find the right mortgage program and qualify for it. Buyer's agent owes the highest duties to the buyer. Hire a licensed real estate agent and have them support you and represent you. Dual agents remain neutral in negotiations and must not advance the interest of one party over the other. Again, it is very important to have a licensed real estate agent supporting you and representing you. That is it from me today. Let's move on to Shinichi's presentation. Okay, Shinichi-san, please go ahead.
So good afternoon, everyone. This is Shinichi Matsumoto, a loan officer with Crosscountry Mortgage. Previously, I covered the first part of first-time home buyers presentation. So today, I'd like to cover the second part of first-time home buyers presentations. These are the topic, starting about loan options and then talking about the what the right loan option for you, and then before you start shopping for a home, something to consider for unique properties on Big Islands. Then I'm going to be sharing about the professional who's going to be helping you through the purchase transaction. And then finally, roadmap starting from loan application till home ownership. So here we go. There are many loan types out there, but basically most of the people will use these 4 types of agency loans. And out of these 4, about two-thirds of people use this conventional mortgage. Each loan types comes with this different minimum FICO score, like 620, 500, and so on. But if you like to have a smooth approval, then you definitely want to have more than these minimum FICO scores. For example, maybe 680 for conventional loans and 640 for FHA. USDA could be possibly 680 and above. VA tend to be very flexible, but your loan officer can definitely guide you through that. And when it comes to minimum down payments, it shows, for example, 3% for conventional mortgage, which applies to first-time home buyer whose income is 80% of AMI, area median income, which is equivalent to $76,000 on Big Island. So let's say if you make over $76,000, then your down payment will have to be at least 5% or higher. FHA, USDA, VA FHA requires 3.5% down payment. USDA, VA, they don't require any down payment. Debt to income ratio. Now, while it shows 43% for conventional mortgage, but debt to income ratio can go higher than 43% with the right compensating factors, such as larger, greater reserves or steady employment that makes up for it, and you may be eligible for even greater than 43% of DTI. FHA, USDA, VA, they have different criteria for that too. If you can receive a gift money from your family members, then you can use it toward down payment and closing cost. And let's look at seller's contribution. It says, for example, 3%, 6%, 9%, 2% for conventional loans. It doesn't mean sellers are obligated to give you that seller's contribution. It means you can receive up to 3% of seller's contribution if you are putting 0 to 10% down payment. Likewise, up to 6% of seller's contribution if you're putting 10 to 25% of down payments, then 9% of seller's contribution if you're putting 25% or greater down payment. 2% for the investment program, and then rest of the government loans, FHA, USDA, VA loans have 664% limits. Now, how do we know which loan program to choose? One way to address that is looking at process of elimination. So for example, say if you are looking at the property that is not on VA condo approved list, or if you have no certificate of eligibility, or if you're looking at investment property, then VA loan is not going to work for you. This is another one. Say if you make too much money, or if your credit is too low, or if property you're looking at is not on the USDA eligible area, then USDA is not likely to work. Now, this case is, say if you like to, if you prefer no down payment, then USDA or VA loan may work for you. If you're looking at property in Love Zone 1 and 2, then conventional loan with Freddie Mac is going to be an option for you, unless you can bring greater down payment, such as 20% or higher, then you may be able to use portfolio loans. Now, before you start shopping for a property, there are certain things you want to be aware of. One of which is Lava Zone 1 and 2, which is very unique to Big Island. If you were to select property in Lava Zone 1 and 2, you have fewer loan options and insurance option as well. And then most likely you're going to be paying a higher premium for homeowners insurance. Or if you're looking at, if you find caves under the property, then most likely insurance companies are not going to insure the house. So therefore, you may not be able to get financing. Say if you like, if you're looking for home property in Hawaiian homeland, then most of the lenders won't be able to help you. Only few FHA approved lenders for Hawaiian homeland can provide you financing. Leasehold property, which could be popular, there are some leasehold properties in Hawaii. Say each leasehold comes with the lease terms, could be 28 years, 50 years, God knows. But suppose you want to get 30 years fixed mortgage, then 28 years lease term is not likely to work. In this case, say if you want to get 30 years fixed rate, then you need 30 years plus extra 5 years, total 35 years for this term for it to work. And non-permitted Ohana units, time to time we see these property with ohana units, and it could be non-permitted. In that case, value of the property, or whether they're going to address either it's non-permitted or not permitted. Now, people you're going to be working with, these are the professionals who's going to be helping you throughout the transaction. So a loan officer can help you get the financing, while a real estate agent can help you select the property and negotiate. Appraisers can help you appraise the value. Attorney, you may need attorney, and a title company can provide you title insurance and escrow service. Homeowners, a home inspector can check the house for you, and the home insurance agent can provide you homeowners insurance. Now, ideally, so here's what you want to do. Before you start doing the shopping, ideally 6 to 12 months in advance, you want to start talking to a loan officer and then ask for either pre-qualification or pre-approval, both of which basically says this person is eligible for X amount for financing. Now, the difference is pre-qualification can be created based on what you say, but pre-approval is created based on your supporting documentation. So needless to say, buyers like to see pre-approval. Now, to get the pre-approval, you will have to provide pay stubs for the past 30 days and then past 2 years tax returns, W-2, and possibly 1099. Then past 2 months of bank statement and ID, and lenders will run the credit for you. Once you get pre-qualification or pre-approval, you go shopping with a realtor and you find the house you like, you make an offer. Once the offer is accepted, then you submit the mortgage application. During this mortgage process, you really basically want to keep status quo. And certainly you don't want to quit or change your job, or you don't want to be a co-borrower, co-signer. You don't want to change employment type from employee to self-employed, or you don't want to open up or close credit cards, or you don't want to max out credit, or moving large sum of money from one account to the another during these transactions. Lenders will correct all the necessary documents from appraiser, homeowners insurance, title, any other third-party documents. Once everything is cleared, file will be sent to escrow's office, and buyer can sign all the documents and then get the key, and then finally be a homeowner. So this is how it works, and I'll be happy to answer any question you may have. Again, thank you very much for listening to my presentation, and this concludes my part.
Thank you, Shinichi-san.